Open up your 18.4 work together. It says KMT Stores is considering a renovation of its store. The project will cost $100,000. The company can issue 7% $5,000 bonds to finance 90% of the project. The remaining capital will come from internal sources. The renovation should enable the business to serve more customers. Complete the form to evaluate the effect of financial leverage on the proposed renovation. Evaluate the earnings potential of the project, assuming that operating income will increase by 6%, 7%, or 8% of the project cost. So what we're doing here is we're going to look at what our investment would be and what our return on investment would be for this. The project will cost $100,000, but they're saying that we're going to be able to serve more customers. So that would in turn hopefully increase our income. Okay, so first thing that we need to do is we need to figure out how much our investment will cost. So we're going to look at this part. It says the project's going to cost $100,000. But it says that we can issue some bonds to finance 90% of that project. So now we need to figure out what do we need to put in on our own. Okay, so if we take $100,000 times that 90%, that means the bonds would be able to cover $90,000. That leaves $10,000 that we will have to invest on our own. So our investment is going to be $10,000. Now, that investment is going to be the same across the whole board. So even if it's 6, 7, or 8%, the investment is still the same. Okay, now we're going to start up at the top here. We need to figure out then our operating income. To figure out our operating income, we're simply going to take our investment times that percentage. So we're going to take that 10,000 of our investment times that 6%. That's simply going to be $6,000. Okay, same thing for 7%, which would be $7,000, and 8%, which would be $8,000. Okay, the next part we need to figure out our interest expense. Now, our interest expense is what we're going to pay for interest on the bonds. So we're going to look back here up at our directions. Okay, remember our project costs $100,000, but we're financing 90% of that, which was $90,000 with these bonds. So what we're going to do is we're going to figure out this part here. How much interest are we going to be paying for those bonds? So we said the project will be financed with bonds for $90,000. Okay, 90% of 100,000 is 90,000. Okay, then we're paying a 7% interest rate. So we're going to take 90,000 times that 7% interest rate, and that's going to be $6,300. Now, again, this is going to be the same all the way across because we are financing those bonds for that project, no matter if it's 6%, 7%, or 8%, we're financing those bonds. So that's going to be the same all the way across. Okay, next part, we're going to do our net income or loss before federal income tax. We're simply going to subtract these two numbers. So when we take 6,000 minus 6,300, we're going to get a negative number, negative 300. Okay, we're going to do the same thing for this one, 7,000 minus 6,300. Here we get a positive number of 700. And our last one, 8,000 minus 6,300, we get a positive of 1,700. Okay, next thing that we're going to do is we're going to figure out our federal income tax on that net income. So we're going to take the number that we have for net income before federal income tax times that federal income tax of 25%. So we're going to take negative 300 times 25%. That's going to give us another negative number, so we have negative 75. This one we're going to take 700 times 25%, and we get 175. Last one, 1700 times 25%, and we get 425. Okay, next line, net income after federal income tax. We're going to take the net income before minus the federal income tax to get our net income after federal income tax. So we have negative 300 minus negative 75. That's going to give us negative 225. Then we have 700 minus 175. We're going to get 525. And the last one there, 1700 minus 425. That will give us 1275. Okay, the last thing that we need to do then is we need to figure out our return on investment. Our return on investment, we're going to take our net income after federal income tax and divide it by what our investment was. So here we're going to take negative 225 divided by 10,000. This is a percentage, so remember we have to change that number into a percentage. So we're going to get negative 2.3%. We're going to round to 0.1%. Okay, next one, 525 divided by 10,000. We're going to get 5.3%. And last one, 1275 divided by 10,000. And we get 12.8%. Okay, then it asks us under which possible outcome should KMT Stores renovate the store? And it says check all that apply. Well, obviously, we're going to want a positive return on our investment. Now, the best option would be our 8% here, but the 7% is going to work as well. We want to stay away from that 6% because here we have a negative return on investment. Okay, so we want to do 8 or 7. Go ahead and check answer. And save and continue. Do your 18.4 on your own. After that, you can work on your application problems, the mastery, and the study guide. We will not be doing the challenge problem for chapter 18.